if the Fed's lending facility, it's called the Bank Term Funding Program. That's what they came out with over the weekend. If that was in place last week, Silicon Valley Bank would still be in business, and so potentially would Signature Bank as well, although they had some more crypto exposure and different things. But basically what happens with that is, even if you have the unrealized loss, you can borrow from the Fed at the full value of your securities, what they would mature at because they're treasuries or they're government-backed securities, and they wouldn't have had to go out and raise capital even though the deposits were going out. Now, I do think the Fed is probably going to have to do one more thing, and rather than just implicitly guaranteeing deposits, potentially explicitly guaranteeing deposits, because right now there seems to be an incentive to move your deposits. If you're a big business, relatively smaller individuals and so on are staying in their banks and they're all staying put and there's no big deal. But bigger businesses, I think, are starting to move to the big four systemically important banks, and that's not really healthy for the banking system. So I do think we need to see some policy come down and say, we are going to have some level of backstop for unlimited deposits so that those deposits stay spread over the entire banking system versus just going into four banks.